Hey guys, thanks for taking the time to watch this video. I wanted to share my ideas and thoughts about why I think now is a great time to buy. I feel like there's a lot of fear about the market. There's a lot of fear about tariffs. There's a lot of fear about a housing bubble. And I do see that a lot of clients coming to me that I've been working with are getting a lot of their information from family members, friends, coworkers, and things like that. And I really think that you really need to analyze the data and talk to someone that knows what they're doing, a professional. It's just kind of like going to the dentist. Like your tooth hurts, you don't go to your mom or your dad, unless they're a dentist, and ask them, hey, what should I do? My tooth hurts. You would go to your dentist. You'd go to a professional and find out what the right advice is. Same thing here with real estate. I think you need to talk to someone that's been in the trenches and knows real estate really well and has understands past markets and things like that. I have over 30 years of experience in real estate. I've bought and sold multiple properties. I currently own 4 properties as well. So I have a lot of experience in it. And I think there is a great opportunity in this market right now, as long as you understand what that opportunity looks like. And, a big thing that I always look for is I look at the historic economic factors that have played in. We see a lot of this stuff repeat itself. What must go up must go down, those kinds of things. And in a market where there's a lot of animosity and people are not sure what to do and people are hesitating on buying, those are usually the best opportunities to buy. And I feel like that's exactly the kind of market we're in. So what I wanted to give you guys today is some solid background history. I got some charts and I'm going to share some examples with you on why I believe now is an amazing opportunity to buy. Here's the first thing, benefit of home ownership. I love this study. This is a study that comes out each year. This most recent one was from 2024. It shows that the average homeowner has over 42 times greater net worth than the average renter. And that this 42 times, it's mostly that appreciation and growth in having equity in your home. That's where that comes from. So if you're a renter right now, thinking that you're doing the right thing by not buying, these numbers should really blow your mind and get you thinking in the right direction, that real estate is a great asset that you want to own to start really building wealth for you and your family. Now, this is one of my favorite charts back to 1975 and even further in some cases. The blue line is interest rates, 30-year fixed interest rates over that period of time, and the green line is housing values over that period of time. Now, these gray lines here are really important because these represent recessions. We're seeing a lot of talk about recessions right now, and these are things that we need to keep in mind, that what does a recession mean to us as homeowners or potential home buyers. And what you look at is okay, interest rates start to go up as we head into recession. So typically before a recession, we start to see inflation going, the economy's heating up. So the feds have to jump in and slow things down. So in order to slow things down, they raise interest rates up. As they raise interest rates up, the economy slows down, and then eventually the feds push rates back down and re-stimulate the economy to keep things where they want it, which is around that 2% level of inflation that they've been talking about quite often on the news and in different financial reports as well. So you can see here, even back as late as the 80s, interest rates skyrocketed due to high inflation, slowed down the market. In my opinion, they didn't wait long enough and they dropped rates significantly and quickly, but the economy hadn't slowed down enough at that point. So the economy picked back up and the feds did exactly what they always do. They raised rates to slow the economy down. And we saw another major drop in interest rates and continue to go down over time. Now here we get another increase into a recession and then rates drop. Increase into a recession, rates drop. Here's a little increase into recession, rates drop. Here's the 2020 pandemic, same thing. You saw rates kind of peaking up, then the recession hit and they had to drop interest rates dramatically to re-stimulate the economy. Well, here we go again. Now interest rates are starting to head back up higher, and there's a lot of talk about a recession. The economy is showing all kinds of signs of slowing down. Once the economy does slow down too much, we start to see unemployment ticking up, which we've been seeing. You're going to see the feds react and continue to drop rates lower and lower and lower. There's a lot of talk already about trying to get interest rates lower. Secretary of Treasury, Scott Bessent, wants lower rates, even up as high as the presidential level. So the overall goal is eventually they're going to start lowering those rates and rates are going to come down. And look what happens with home prices, guys. Even through these recessions, home prices continue to rise. Now, the one anomaly is obviously right here. This is that 2008 housing debacle, and it caused an unnatural market decline. currently you have to qualify for those loans. You have to be approved and show income and assets to buy a house. This is nothing like 2008 whatsoever. And look what happened though after the decline. If you would have held onto your house right about 2015, boom, look at the values skyrocket up. So there's a great opportunity here. We're here in this area right now where interest rates are kind of flattening out. They're getting ready to go down depending on where we hit that recession, if we hit that recession, and then they'll drop back down and you're going to see the housing market continue to go up. Now, here's another great chart that I love. This goes all the way back to 1942 when they started collecting this data on homeownership appreciation. Since 1942, we've had 75 winning years, 7 losing years, and 1 even year. So if we look back into when are those losing years, 2007, there's 5 years in a row because of that fraudulent market of securitization of loans that shouldn't have been. That's 5 of those years. We got to take those out. That was an anomaly that's not going to happen again because you have to qualify for the mortgage. And then the other only 2 losing years in real estate are 1990. There was a less than 1% of fractional loss. I think it was 0.7% loss. And then in 1991, there was a smaller fractional loss, a negative like 0.1 or 0.2% loss. And this is during the S&L crisis. Here in 1955, we have an even year. But look at the green, people. This is real estate. Is real estate a good investment? Heck yeah, it is. These numbers are astounding, and this is how you create wealth. You buy an asset that's going to continue to grow and has a great history of growing in value. Amazing numbers, and these are going to be green numbers going forward, and I think they're going to be a lot higher than the numbers we're seeing right here. I think we're going to be looking closer into that 10% range, especially in the Seattle market with all the pent-up buyers that we have out there. As soon as rates start to come down, you're going to see values start to go up. Cost of waiting. I get a lot of clients that say, I can't afford the payments right now. They're too high. Well, here's a current market opportunity with 5% down. Let's say the rates are 7% on a $600,000 house. Payment is $37.92, just principal and interest, but you add in taxes, insurance, mortgage insurance, $44.67. That's a hefty payment for a $600,000 loan. But you know what? You wait it out a couple of years, rates come down, you lock in at 5.5%, your payment drops down by over $500 a month to $38.33, a little more reasonable management on payment. But what if you waited? What if you didn't buy and you decided to wait for 2 years before that happens? Well, here's the future market opportunity. The same house you could have bought for $600,000 now costs you $650,000. You're borrowing more money, $617,500 just to purchase the house. That means you're putting more money down and you're going to have a higher payment. Look at how much we're borrowing over here. Only $565,000. You bought it at $570. We kept it for a couple of years. I overestimated. I added some closing costs in. I wanted to make this as realistic as possible. So I used a higher loan amount probably than really is going to happen. $38.33, $41.81. So we're talking about you lost out on $55,000 in free equity that you would have been building over the time, not free, but it grew. You're looking at $298 more interest that you're paying every month. Your potential overbidding, that's the one thing a lot of people don't remember is in 2021 and 2022 when the pandemic happened and interest rates dropped significantly, we saw a huge amount of bidding wars where values would go even higher than the actual list price. So maybe you get it for $650, but more than likely you might even pay more than that. You might have to pay $675, $680, and again, your payment's going to go higher and higher and higher. Okay, I get a real life example. This is a perfect example of why I think now is a great time to buy. This is a house that was purchased. I did the loan for this person on February 28, 2023. They bought the house for $1,050,000. They put 5% down, conventional loan, and they had mortgage insurance on it. Right now, look at the value, guys. I mean, I don't trust Redfin that much as far as value goes, but you know, because they use this online value system, but 1.32. They bought it for $1,050,000 just over 2 years ago, and now it's worth $1.32 million. So what does that look like? Back when they bought it, $1,050,000, $997 loan amount with 6.5%, with 5% down, 6.5% rate. Total payment $74.30. They got principal and interest, property taxes, homeowners insurance, and mortgage insurance. Where are we at today? I ended up refinancing them back in September when rates dropped down close to 6%. The new value came in at $1.3 million at that time. The new loan amount was $989. Their new rate is 6% after the refinance. Their new principal and interest, property taxes, homeowner insurance, and no mortgage insurance. Their payment dropped down to $67.72. Pretty astounding difference in monthly payment, and puts them in a ton of equity. They now have 20% equity because they no longer need the mortgage insurance. Realized savings per month, $657, appreciating the equity growth over $311,000, guys. This is an amazing market where you definitely want to get out there and buy. Now, if you're concerned about whether you qualify, if you're working on your credit, you're not sure where you stand, give us a call. We'd love to talk to you about your situation. The best thing to do is always just get pre-approved. Pre-approval costs you no money. There is no hard inquiry on your credit. We only do a soft pull to start, and then we can work up your full financial profile and then get together for a strategic pre-approval consult. Who knows, maybe you get pre-approved right out of the gate and you're ready to go, and then you have all the tools you need to get out there and start making offers. And if you're not ready to buy, we can put together a comprehensive plan to put you in the right position so that when you are ready to buy, you can get out there and make things happen. If you have any more questions about any of this information today, definitely reach out. We'd love to chat with you, and hope you have a fantastic day. Thanks so much for watching. We'll talk to you soon.